Well, our featured guest today is David Baskin. He's got some strategies for diversifying your portfolio and some conversation about when is the right time, David, to sell a portion of a position or all of a position in which you've got a big gain.
You know, Paul, one of the keys to success over the long term as an investor is diversification. And it's very tempting to ride your winners forever.
Right.
And a lot of the literature says things like water your flowers and pull your weeds and, don't change your winning strategy. But the problem is you can get much too much money in one stock. And
right.
I guess a lot of people learned this with Nortel and BCE 20 years ago.
Yep.
At one point, those two stocks together, I think, were something over 50% of the entire TSX index. And right now we have a situation in which the so-called Magnificent Seven are more than half of the entire S&P 500. So if you have an exchange-traded fund that's market cap weighted, you're enormously exposed to these names. But what I really am interested in is what happens if you bought Microsoft 10 years ago,
right,
and you have 1,000% gain. Your money's gone up 10 times. So when you started, it might have been 3 or 4% of your portfolio, and now maybe it's 20% of your portfolio. Right. Well, you don't want to make the Nortel mistake. I'm not saying Microsoft is going to zero or it's going down 20%, but we've seen some of these big tech stocks have moves of down 30%, down 50%. Netflix, I think, down 70%.
Yeah.
Is your stomach strong enough to take that? Well, if it's a 3 or 4 or 5% position in your portfolio, sure. But if it's a 30% position in your portfolio, the answer is no, you probably don't want to do that. So for our portfolios, for our clients, we have a hard cap of around 6%.
Okay.
And I have clients who are up 2,000% on Microsoft.
Right.
They have a 20-bagger.
Yeah.
And you could say, well, Baskin, you're stupid. If you would just let the money keep riding, they'd have made much more money. But that's not professional, because we don't know what's going to happen. Nobody knows what's going to happen. The professional thing to do is, every time it gets up to 6%, take some money off the table, redeploy it, and then after a little while, you're playing with the house's money. Nothing really bad can happen to you at that stage. And you've kept your portfolio diversified by sector, we hope, certainly by company, and that's the way to do it. The history of these stocks is very volatile. You don't have to look at Nortel, although that's the poster child. But if you look at the last, say, 15 years or so, from 2007 to today, you can see, even Apple and Amazon and so forth have had tremendous spikes up and down. Nobody likes that kind of volatility in their portfolio. And if it gets too big, you're very vulnerable. So that's what we do.
Last question in this segment. What about in a non-registered account? A lot of investors will shy away from making that type of sale because they don't want the tax bill. Ouch.
Yep. Nobody likes paying capital gains. And that's correct as well. Once you give that money to the government, you're not getting it back. But at least you've got the after-tax money. If you wait long enough, maybe you won't get any more. When we were talking about Celestica, I was thinking about a stock we probably haven't heard mentioned on the show in 10 years, Cinram. Do you remember Cinram?
I do. Is it still around? No.
No. So Cinram was a duplicator of initially cassette tapes and then CDs and then DVDs. And of course, eventually got overtaken by streaming. And the stock fell 100%. Well, it was a great stock while people had it. And I'm sure lots of people wrote it down to the bottom as they did with Nortel. The fact of the matter is, you don't know what's going to happen next. And what happened to Tesla this week? Well, could be much worse. China could, beat Tesla's brains out on electric cars. And a lot of people will ride it down to the bottom should that happen. So diversify, diversify, diversify. Trim your overweights. Take some money off the table. You'll be playing with the house's money. Nothing bad can happen.
David